Once again, appreciate everyone being here. Hope everyone had a good weekend. It's important to touch grass on the weekend if you're really in the like if you're really in the thick of it, Monday to Friday. It's a really good idea to just take a break, reset the battery. So for today, we've got a bunch of things to talk about. First thing we're going to talk about is NQ. Of course, that's what I trade. There's a couple setups that occurred. I'm not going to lie, it was pretty wild, stupid price action today. It was not easy per se. Like I find when I start having to go between multiple time frames, that's like a warning to me that things aren't very easy, because usually if it's really, really easy, it'll just come together on the 1 minute. You'll also notice I have Instagram up. I used to, be pretty active on Instagram with crypto stuff. So I'm pretty like, it's nothing new to me, but I've recently started to explore Instagram again too. So if you want to follow me on Instagram, feel free. I'm posting more here than on Twitter because I'm able to do more creatively that fits kind of like my personality here. I also share a ton of stuff in the stories. I'm not sure how much stuff is still going to be here. Let me see, because I know there's expiry dates. Okay, so some stuff's already starting to fall off, but I post things that I see very, very quickly. You can see here there's a bunch of stuff, 21 hours, so this thing's going to be leaving in 3 hours. But yeah, I post a lot of stuff here. Just like I said, anything I see, more than what I'm able to share on Twitter. Once again, it's just I'm able to share things with visuals. I'm able to share things with music. It's just, to me, it just seems like a better fit for me. So I'm just kind of exploring this. I got a bunch of folders here, so I highly recommend to go through these. I talked a lot about using the daily EQ as my bias, so I have a lot of information about how I do things right here. So if you ever need to kind of reference anything, like there's a lot of stuff here to work with. And then also I got links here to like Tradecopia and to 2 Degrees, and also even just to join the Discord, right? Because we're doing the 20 A+ trade challenge. So and then of course the IFVGs, which is my entry model. So I got a lot of content in regards to like my thought process behind all this and things I kind of look for, like little tips and tricks. So if it aligns with you, jump on Instagram. I know Instagram's not for everybody, but you can see I got tons of stuff going on here that I'm able to focus on. I'll leave it for you. And then of course I got my faith here. So if you're someone that aligns with faith, this is for you too. So let's get into it. Today we'll start with NQ. And I just want to, I might have to just make a few adjustments to my chart. So just give me 2 seconds while I do that, because I had been, if you've noticed, my chart's changed again, my layout's changed again. I've just been, I wasn't happy with the dark mode. It just wasn't giving me good vibes. So I decided to kind of change it up, and I went back with more of a classic approach with the green and the red, more of a softer, more neutral background. I also started exploring this TTFM indicator primarily because I watched this T-Trades video the other day about incorporating the C2 with the IFVG itself. Personally, for me, it's not going to do anything different for me, to be honest with you. And the reason being is because when I started going through my stats, what I started noticing, let me just go to my profile, show you some stats, what I'm talking about. So, see if I can find it quickly. Right here. So, I started doing a deep dive on my own stats for January up until today. And I had logged about 29 trades. Some are mistakes, some are paper. But majority are unfunded and evals. So if I was looking at that C2 kind of confirmation, if you don't know what that is, just drop a thing in the chat so I know. But I feel like everyone knows about C2 by now at this point with T-Trades. Like, it's pretty out there. I see a lot of people stealing his indicator and making it their own, and then, you know, this whole game is very, very dog eat dog world. It's crazy. But anyways, I looked at my stats and I thought, okay, well, let's see how valid the C2 can be for me in terms of adding an additional filter. And when I started looking at my stats, 7 out of those 29 trades looked like they did have valid C2s upon entry, but then they eventually invalidated, right? So 4 wins, 2 losses, 1 break even in terms of those numbers. And that's the thing with the reversal trader, right? Like with the C2, like it doesn't confirm 100% or all the time. In terms of C2 entries that were like the C2 confirmed and then the actual IFVG formed thereafter, there was about 14 trades, 12 wins, 2 losses, 1 break even. Now keep in mind, when I say 12 wins, it doesn't mean I have 12 wins at 2R. I don't trade like that. 12 wins just means I have a green trade, right? If that means I hit TP1 and then the trade goes break even, I still declare that a win. So just keep that in mind, okay? Very different than maybe the way Matt trades in that department. But here's the real like kicker for me was C2 invalid on entry. So that basically means if there's no C2 is just that sweep, right? So it's basically I'm not sure why this is not showing up. Oh, because I hit hide. I'll just quickly show you what I mean. So think of it like this. So you see this candlestick here? Think of a candle to the left of it. Let me just hit rewind. Maybe we can... Yeah, so think of like C2 being like a sweeping candle, right? So think of it like a manipulation, right? So C2 is based around the concepts of accumulation, manipulation, distribution, right? So C1 is accumulation, C2 is manipulation, C3 is distribution. The actual indicator is supporting T-Trades' fractal model. So that's waiting for the C2 reversal to confirm. And once you get that candlestick confirming the higher time frame sweep, which basically just means like you have a wick that goes above, in this case, because it's like we're looking at shorts, it goes above the previous candlestick's wick and then closes below the, I guess it would be the higher the open or the close of the previous candle. So that would determine it being a valid C2. And this is on any time frame. It's all aligned. So with 1 minute, it's aligned with the 15-minute higher time frame candles. With the 5-minute, it's with the hourly. With the 15-minute, it's with the 4-hour, hourly to daily, 4-hour to weekly, daily to monthly. You get my point, right? So the whole idea is... yeah, you know what? That's the thing, man. All this, like, from what I've noticed, like even like this, like you have a nice sweep like this, but this wouldn't be considered a C2 because this candle right here, the way it closed, we would have wanted this candle to close below the close of the previous candle. That's to my understanding how the C2 works. But the thing is that it's irrelevant in this case because when I go back to my stats, I had about 11 trades out of 29 trades that were actually did not even have a C2. They were invalid on the entry. Like the candle had already closed on the 15 minutes saying there's no C2 here. And out of those 11 trades, like there was 9 wins, 2 losses, and 0 break evens. So my only point to this is like just because we have, you know, really cool indicators that look amazing, gotta always go back to your data and see how it works with how you're trading because it might not actually help you. So in this situation, my system actually performs better without using the C2 for confirmation, right? Using it strictly would have filtered out 9 winners just to avoid 2 losers. So the thing with the TTFM indicator is, of course, there's value to it. The question is if you do use it, like how can you use it to make your life more efficient? And that's one thing I always address with during the live streams. It's like if you have indicators on your chart, they should be there to make your life more efficient. So I started to take that to heart and I thought, okay, well, if I'm not going to use it for the C2, what can I actually use it for? And what I kind of came to was the idea, like I don't mind having the C2 there. It's just, it could be like a good reference, like, oh, okay, there's also a C2 there, great. But the main thing I was also looking at was looking at it for SMT, not SSMT. Let me just see if I can find something here. Let me just double check. I might have to adjust the settings. Let's go 5. Let me crank this up a bit. Okay, so essentially like this. So I thought, oh, you know what? I always do look for SMT, but if this thing's actually gonna automate the SMT for me, then you can see right here, it's showing me the SMT. That's pretty efficient for trading, right? Like for something to plot out that. So even though I'm not using the indicator in the way that it's probably designed for, I could still use it to make my life more efficient. So what I've done now is I've hidden the higher time frame candles to not just not confuse me with things. And all I've done is I've set it up so that I got basically nothing on my screen except for the C2 print, which you see right here. And then I also have the SMT labeled off here, right? So that's basically it. So when it comes to NQ, it's going to be looking at ES and it's going to be looking at YM, and it's automatic. So that's why you're seeing YM, and you would probably also see ES here, right? Right here you can see ES. So I mean, it's a pretty cool indicator. Like I said, it's a powerful indicator, and it supports the T-Trades model, which is the C3 expansion. Of course, I don't trade that. I'm trading the actual reversal inside of the C2 typically. So, and that's with the IFVG. So that's how I'm using it. I just gotta quickly go back and double check my settings here just before we start this whole thing and I start getting into more and more information. Let me just double check this. Okay. You know what? Someone was actually asking me on Instagram. I don't know if they're here, if they're gonna check out the replay, but they would ask me about my settings on the IFVG Pro Plus. So I'll just quickly show you guys. Like, I mean, I have all the alerts set off here. So if I set my alerts, you know, using right here. So if I have the alert set, which I already do, basically you can see here, like IFVG, all that stuff. It's just like a one style alert, but it alerts me on everything I have checked off here. So I have all this checked off. So it's going to alert me on a bunch of stuff, right? IFVG time frame is just based off the chart itself. The confirmation is just the same as the time frame. History, I like to have about 5, just so I can see back, especially if I'm trying to backtest. Is that's super easy. Bias, I keep neutral. That way, in the event that there is a bullish setup or a bearish setup, they will both appear. Series IFVG type or single. So I chose to use series, and the reason I use series is because if you have like multiple FVGs, let me see if I can find one. Because I know today there was one. Let me just double check. Okay, so something like this. So you can see here how it's blocked off this entire area here, and it's calculating a series of IFVGs. So it's just stacking those FVGs. And what that does is it should give you a better entry, like a more safe entry. Of course, I can adjust this to also be single. What that will do then is it will just mark off probably the first one. Right there it is, right there. So this is actually a trade I took today. It was a little risky, but it still fit my mechanical process. So I'm going to walk everybody through that in just a second. In terms of the invalidation, I mean, it's kind of irrelevant because it's just the indicator showing you if it failed or not. Swing just basically means the swing point, whereas if I were to use close, it would just mean if a candle closes beyond the IFVG, then it would technically deem it as an invalid entry and a failed entry. So I just keep it on swing because my stop loss position is all that matters, not what the indicator is telling me, that placement to be. If you're learning and stuff, it makes sense, sure. I also don't remove anything that's invalid because I want to see my losses. Like I want to see where the indicator has failed, right? So now it's taking it off, right? I don't want to see just a perfect IFVG. Like I want to see everything, especially if I start looking back in time. I want to see everything, the good, the bad, and the ugly. Now here's the major thing about my settings, okay? this liquidity time frame. So as you all know, I always mark off H4 levels, I mark off H1 levels, right? And I use those as liquidity sweeps, buy side liquidity, sell side liquidity, to then start looking for my IFVG setup. The indicator like has a setting here for custom, right? Custom 1 hour. I can also customize it to anything I want, but I prefer just using the 1 hour because typically, you know, whether it's a 4 hour level or an hourly level, the thing is my minimum is an hour level. So even a 4 hour level will be captured as a 1 hour level anyways with the indicator. So the reason I have it set like this is that it's only going to like flash setups to me that align actually with my system itself, which is using those higher time frame liquidity levels. And then everything else is just aesthetic. I have a filter here, so it's only going to show me setups that are within that window. I've experimented with having them all on, having, having all of them on, and then now I've just said, you know what, I'm only going to keep one on because I'm only trading during that session, and if I have everything on, it's going to give me FOMO, because like setups can form all day long. It doesn't mean that I should be in them, right? So I've set it only for that. In terms of the liquidity, what that basically means here, additional liquidity, I've set it here. The reason that this is important to me is that if I just go back here, let's just go back to the start of this setup. Next. Okay, so you'll notice here there's a couple of arrows here, right? So that's basically showing me the draws on liquidity. Now, it's pretty obvious that there are draws on liquidity, but it doesn't mean it's always going to hit. Okay, but I like to use it as a quick reference. The whole thing for me is how can I make my trading session more efficient? So if I already have a level marked off here, I don't have to go looking for it. I know it sounds silly because like how hard is it to look for a swing point? But truth be told, when you're like in the middle of trying to set this up, trying to figure out your position size, you're looking at where your stop loss should go, and you're on the 1 minute or 2 minute time frame, like things are moving fast. Being able to just quickly have something that just shows me where the liquidity is allows me to just quickly, set this up. So like if I have it like this, I know that, hey, my stop loss, either going to go here, but most likely I'll just put it at the swing point because it's so close. But now I can already just go like this, right? And go, okay, that's 40 points, 1.66. Okay, what about this? What's this look like? 2.94, 71 points. Does it mean I'm going to get that? No. But it's just something to give me some sort of a visual reference to show me where the draw on liquidity is. So I find it very important for that reason. And then the other thing is right here. This is another very, very key point. I've talked about how the size of the IFVG matters massively. Now I use 5 only because I want to see things that form, because sometimes you'll get IFVGs that form that are like 3 points, and if I have my sensitivity set to showing me everything, it's going to show me a 3-point FVG. But the thing is, like the smaller the FVG, typically the lower the probability is of it holding the position and going in the direction that you want, right? So something like this, for example, you can see like this is a pretty small IFVG, but it is over 5 points. It's 5.5 points, right? Look at that. 5 point, right there. 5.5 right there. So 5.5, that's right here. So my indicator is going to show that to me. The goal ideally is to see something around, 6, 7 to like 12 to 15 points. Like those are usually the best. But sometimes they also don't work out, right? Like it is what it is. And I'll show you what I mean, because this setup here was a failure. And then if I just quickly go back to the indicator one more time, I basically have everything else turned off. I don't want really much else to show. I don't even need the table. So it's pretty straightforward that way. But those are the key things of my settings for the indicator. And once again, I don't need the indicator to trade. It just makes my life more efficient, right? Because if I have the indicator off, I can still, as we go back to the beginning, let me just turn off all my indicators. And, when I show up to the day in the morning, the first thing I'm doing is I'm marking off my levels, right? So let's just quickly show you what that looks like. So let's just go back here. So this is the H4. The very first thing I'm doing is I'm just marking off H4 levels, right? Like H4 is here. I know that's buy side liquidity. right? There's another one here. There's another one here. And there's another one here. Now, what constitutes as a buy-side liquidity level? Well, if you look at each one of these candles, there's a low, there's a high, there's a low, and then there's a high. And the high is a high because it's wicked above the candle to the left and to the right of it. So it's created that swing point. And the reason I use it as actual buy-side liquidity level is because if I look down, or to the, sorry, if I look to the left, I can see that there's another clear institutional swing point, right? Like I said, there's a higher high here, higher low, higher high. Same thing here, right? We have a lower low, lower high, higher low, lower high. So that's another key institutional point. Same thing here, and then of course same thing here. So that's what I'll do there, is I'll mark off the sell side pressure first. Now if price starts to go the other direction, then I'll jump in and I'll start marking off my sell side liquidity levels, right? Which would just be the opposite of this, right? So anything down here. So it could be this level, it could be this level, or it will be that level. Now there's another swing point that I also mark, and these are known as what I call internal swing points. Now what's an internal swing point? Well, it's a swing point that doesn't have an institutional low or high associated with it, right? Similar to what we saw, or more in line with like what I just showed you here with the BSL and the SSL. So something like this, for example, right here, because it's a clear swing point, but there's no real institutional swing high and low set or in the series with that candlestick. To me, it's just like it's just an internal swing point. So I'll actually mark it off accordingly as an H4. I put plus internal because it just shows me bullish, and I'll just mark it off that way, so I'm aware of what's happening. Now the reason I put those on the chart is because I know that they count as valid sweep levels. Next thing I'll do is I'll go to the 1 hour, and when I'm on the hourly, I'll do the same thing I just did like on the H4. Is I'll just go through my levels. Now you can see all these levels are pretty much set already, so I don't really have to do much. There's an H1 level. I had actually marked that as H1. What I can do now, I had actually marked that as H4. I put it down as H1, but it was an H4 level. But I'm actually going to change this to an H1 sell side because there is a clear point of interest here. So the thing is, like, adjusting what you have is mandatory. If I go now a little lower, I can see that there is another level here. Now I'm only doing this just to show you as kind of like just like a routine thing. And then the next thing I'll do is I'll go to the 15-minute. And the reason I go to the 15-minute is because that's when my ICT kill zones and pivots indicator starts to appear now on my chart. It appears on my chart and it starts showing me the more finer tune levels. Asia high, Asia low, London high, London low, previous daily high, previous daily low. And what I'll do in this situation is I'll start to then adjust the levels that I had originally marked as H4, H1, and I'll correlate them more correctly with what they actually are on the lower time frame, right? So this is good. Here's Asia low, so I'll actually just mark that off as Asia low. Now you'll say, hey, well, that's not a valid swing point, but that's okay because we know Asia low or these session lows and highs are key liquidity levels. So I'll mark that off. Now, here's a great example of what I'm talking about. I'd mark this off as an H1 sell side liquidity level, but this is actually London low. So I'm just going to readjust that and mark it off as London low. And then I'll do the same thing at the top. Previous daily highs up here. So I'm going to change this H4 buy side liquidity level. I'm going to turn it into previous daily high. Okay, and then I'll just keep looking higher up and see, okay, that's it. So that's basically how I set my chart. And then I wait. Now I have my levels. You set alerts on these levels and you just wait for price to tag them, right? So if I just go back to 9:30 open, which would have been about here, this is what it looked like at the open. So we were sweeping London high during pre-market. Okay, right here, London high is being swept. And I have an alert set. I go to the hourly and I just wait. Now you'll notice I also have the daily EQ here, right? Okay, the daily EQ is set right here. Daily EQ is something I've talked about a lot. It's also on my Instagram page if you want to learn more about it, or just check the old live streams. But this helps me form my bias now. So now that I know that the daily EQ is here and I'm trading way up here, that tells me that I'm going to have a bearish bias today. That means I'm looking for shorts that are going to be aligned with higher time frame buy side liquidity levels. Okay, it's very, very mechanical, very, very simple. Where are my draws on liquidity if I were to take a short? Well, right here, right? London low, Asia low. These would be my targets, basically, right? And then if price were to go below this, then now I'm looking at sell side levels to go long, right? And these are higher time frame levels. So just keep it simple. It doesn't have to be so complicated. The thing that gets complicated, though, is when the price action doesn't give you easy, clear looks. And that's where it's really important to understand, like, when you should risk and when you should not risk. And when you might want to risk, like, a full-size position versus maybe you want to risk a half-size position, right? Or maybe you're just going to keep it static across the board. Maybe it's like, instead of, like, risking $400 on, like, A-plus in very, very super clear A-plus setups versus $200 on an A-plus setup that doesn't look as clear, you might want to just say, hey, I'm just going to risk $300 on every trade, right? Something like that. So this morning, here is basically the open. We've already swept London high. Now, I'm okay with taking setups pre-market if some of these key levels are getting tagged, but I'm very, very cautious the closer and closer we get to New York Open. So the reason being is because we don't know how price is going to react, and it's Monday, okay? So if I hit play, you'll see that price just like erratically is just moving all over the place. We just continuously push higher. We're on the 1 minute time frame. You can see that there's no actual IFVG setup here, right? Even though we've set a key level, there's nothing to work with here, right? So price just continues to grind higher. I'm now looking and waiting to see what we're gonna do up here, right? Let me just double check one thing. Hit next. Okay, so this is actually a really good example of why you should wait for key levels to form or to get tagged and not jump in with FOMO, okay? And I'll show you why. So right here is a really good example where it looks like we have, a nice IFVG setup here, right? You have a clear candle close here. Is there any sort of alignment on the hourly? Okay, so there's no alignment on the hourly. The lowest level was down here. It was around here. Let me just mark that off quickly. If I go to the 15 minute, then I can start looking at other levels. But this is now going against the way I'm trading, right? I don't want to start breaking rules. Now, here's that H1 level. The reason I put that in here is because I just want to show you something. Because I find some traders, including myself in the past, would rush these setups. So what that means is you'd see a sweep down here. You can see price is clearly moving higher here, right? But then you get something like this, where you now have a clear liquidity sweep. Okay? V-shaped reversal. Price closes below the IFVG. You're thinking, oh, this is an easy... maybe you're going to set your stop loss right at the top, and you're thinking, oh, this is an easy play, at least down to here, right? Maybe for a 1-to-1, or maybe it's going to go lower. And then sure enough, price just goes totally against you. Now, why did it go against you? Or why would it have gone against me? This is the patience that you have to have of understanding the levels that are in front of you. So if price is already, closed well above the H1 BSL, one of my rules is, put this up on the chart. Okay, so kill zone, I want to see a major liquidity sweep. Okay, that means you got to have an instant reaction from that point of interest. If you didn't get that instant reaction, well, this can no longer be checked off, right? So even though there's strong momentum and a clear draw on liquidity inside of the New York AM kill zone on the right side of premium and discount, that's still one part of my checklist that makes this trade now not A+. Okay, so this is how you have to really leverage your checklist to keep you in check if you start to really experience that FOMO. As if I had entered this, that would have been a stop loss, and it would have been a stupid stop loss to take, right? Now, by waiting, price now tags a very, very key level here. So now we just keep observing what's going to happen next. I just want to check one thing out quickly on my side. I just want to make sure I have the right time stamps. Okay, perfect. So now you have something like this happening. So we have a very, very key level here. And this can happen where We have all the stars are aligning that we're in the kill zone. There's a major liquidity sweep happening. That's the PDH. We're on the right side of premium and discount. We have an instant reaction. Strong momentum, sure. Clear drawn liquidity, sure. But where's the IFVG? There's no IFVG here. Even if I go to the 2 minute, right? It's just consolidated price action with long wicks taking out those IFVGs. So there really is no setup for me. So even though I might desperately want to get into a trade, which is not a good thing, but you're just waiting for that setup. You still have to follow your rules, okay? Whatever those rules are. So once again, no trade there. Let me close this off for a sec. And then sure enough, price continues higher. Okay, so now we're approaching the next level. So I'm going to get rid of the PDH. See one thing quickly. 1045. Okay. Okay, so we're going to study now what's happening here. Okay, so here's an H4 level. If I'm looking at this from the 1 minute time frame, it technically hasn't tagged. Okay, what I started doing was I started moving up time frames because I wanted to see what else was at play here. And positive would have been 1045. Let me just double check on my side one more time. Yeah, should have been right here. So for some reason, okay, let's just hit leave. Oh, that's why. Okay, I know what happened. Let me just go back here for a sec. Okay. So if I turn this on now. Okay, so when I go to the 5 minute now, what you start to notice is the PDH level, which on the 1 minute had already been smoked here. Okay, but when you're on the 5 minute, it actually looks pretty clear. Okay, so if I'm taking a trade like this, what that means is, once again, I need to see all of these things met. So here's the PDH. I'm getting a V-shape setup. So I would define that as an instant reaction. Strong momentum just means how many candles does it take to close below the IFVG. So obviously if it's only taking a few candles, that's showing me strong momentum. And then the candlestick that actually closes below that IFVG, the way it closes is also going to tell me if this is worth to take a trade. So I'm on the 5 minute, mind you, okay? Now this is something I don't really have a rule about, but I think after today I'm going to set a rule for myself to not take trades on the 5 minute and just exclusively try to take them on the 1 to 2 minute. Even the 3 minute kind of, I feel like maybe I should just hold off. But I'll show you what happens. I already hit play before, but you can see right here that right here we get the confirmation, candle closes. I would have had my stop loss at the swing point. And the reason being is that I know that the H4 BSL is up here. So if this is going to go higher, I know that it has to sweep that. So I'm okay with this being my invalidation. You can already see that it's showing me my drawn liquidity levels here, right? So let's just say, I'm targeting something way down here. Pretty clean setup. Something I would take all the time. I have a key level here. It's also aligned as a BSL, right? So it's an hourly BSL level. So this was a good trade in my opinion to take. It was just on the 5 minute, it wasn't on the 1 minute. Of course, this trade, as I had when I had fast forwarded, this ends up taking me out stop loss within two more candles, right? So within 10 minutes, trade's done. Okay, that's how things go. You're not going to always have wins 100% of the time. It is what it is. So now price has finally swept that H4 BSL level. Okay, great. What do we do now? Same thing. I'm just going to wait to see for reactions. That's all I'm going to do. So as I'm waiting for reactions, I start noticing this now. Okay, now I'm on the 3 minute. If I go to the 1 minute, the problem I had with the 1 minute was that all of this liquidity down here, right? It's not showing me like a singular type of setup. Singular just meaning like there's too many imbalances down here. That price, and I mean even here this FVG is not even worth it, right? But the thing is, price could just bounce off from here and go higher, right? So I'm trying to look for clean setups, first off, that have a valid IFVG, and then I'm trying to find areas where the liquidity can move to, right? The drawn liquidity, because I don't want to be stuck tagging like an FVG and then price goes the other way when I'm targeting something like a swing low here, right? So I moved up to the 3 minute, and I thought, okay, you know what? The 3 minutes is actually quite nice. It's a good size. I was looking for the reaction. I thought maybe this will be pretty good. Now, here's the mistake I made. Okay. Here's another thing I have to also remind myself. It's not a hard rule, but I'm going to make it a hard rule. So when I'm on the 1 minute, I often sometimes chase into positions, and chase might sound like something bad, but it's not bad. It's just I wait for like if I see the candle below the IFVG and say like there's 10 seconds left and it looks really aggressive, I may just enter that position with a market order before it closes. Of course, the risk that I run into is the candle at the last second closes back inside, right? That's the risk I take. But usually on the 1 minute, this doesn't really happen too much. So I brought that same context into the 3 minute setup, and that was a bit of a mistake because I should have waited for that candle to close. So I had actually taken an entry right here. When I hit market order, it was a little down here, but then the candle closed and it was up here. So now what's happened is my stop loss is at the swing point, which is fine. 17 points, not too bad. I usually try to get, ideally I want to try to have like, 10 points to about 25 points stop loss. So give or take, it doesn't have to be exact, but 17, I was like, okay, this is a perfect stop loss size. I'm just targeting, the lows, maybe take another TP here, see what happens. But the problem once again is I entered with a chase. So now I'm in this position and I'm stuck and I'm just waiting to see what happens. So lots of crazy shit going on here. I think I almost get wicked out right here. Yeah, right there. Almost got wicked out. I thought I was going to be done. And I was like, this is going to go down as a loss with a lesson to be learned. And then somehow we start getting price doing this. Now, I jumped immediately to a lower time frame. I believe I jumped to the 1 minute time frame. I think it was the 1 minute. Once again, I just want to double check my notes to give you accurate information. Stand by 1 sec. Yeah, so I went to the 1 minute time frame, and what I started doing was I started to mark off some liquidity levels. I wasn't going to use the 3 minute at this point because I thought, you know what? I've already taken one loss today. I'm going to just play it a little bit safer because I know price action hasn't been very, very clean. So I'm just going to be very, very smooth about this. I'm not going to stress out over what the market is doing. I'm just going to be smart about this. And I'm going to take my profit based off however it comes. Okay, so I think I had it there. So now you'll see I have these two levels marked, and I have another level here, and there was also another level way down here too, which could have been used, right? But the plan here is I'm trying to get about 20 points, right? So that's about 17 and 3/4, no problem. This one's about 30, so that's cool. This one would have been about 47.5, and then it goes well below into like the 70s. So my goal here is to skim profit at this level, set my stop loss to break even. And as price starts to go lower, boom, TP1 hits. When this candle starts to drop, I'm using this button here, this button here to buy. I'm reducing my contracts. So, whatever that number is, it doesn't matter, but I'm reducing my contracts, half size taken here, another one, a 25% taken here, and the rest is basically for whatever is going to happen if it goes lower. I don't have to wait sometimes for these levels. I'm just going to be aggressive and take it what I see because I don't know what the market's going to do. And sure enough, this is why. Okay, so 2 TPs taken, 75% of the trade taken off, made back the loss. Stop loss goes a little bit above or below break even because I want to just make sure I don't get tagged with fees. And literally the next candle or two takes me out. So that's how I executed this trade, using multiple time frames, using higher time frame H4 levels. I showed you how I set it up. I showed you how I maneuvered through time frames. Now you can see here, if I go to the 3-minute time frame, I just want to show something to you, because this actually doesn't change the mechanics. I just used the 1 minute because, like I said, I wanted to be a little more defensive because my entry sucked. Even though I got a better entry out of the setup, I didn't enter in the way that I should have entered, or that I, per my plan, because I got faked out. So let's just say I was going to wait for this to close. The actual candle where I would have entered would have been around here, okay? And that means then, I would have probably had my stop loss. I probably would have kept it the same here. So you can see now it's just below 25. So it's still good. Now you'll notice there's one candlestick here, right? Now one thing I always talk about is 20 points. So 20 points is about here, right? So I would have just actually put this right here as a marker point, like that. So, and I would have set an alert here, because what happens is as price starts to now aggressively move lower, I would have taken off 50% of my position here. I would have taken another 25% off here, and then the rest I would have left for the bottom. So in this situation, 20 points are taken. Stop loss would have got tagged at break even, right? But because I entered way over here, I actually got closer to 30 points, right? You can see here is about 30. I actually got 30 points. So I got 10 extra points out of it with 2 TPs, 75% closed off. My goal, once again, was to just make back that loss given what I was seeing. Now, if price were to have continued going even lower, well, then I would have been, I would have had a profitable day, right? I would have said today was a green day, but today was a break-even day. And there's nothing wrong with that. But you can see now how I use the time frame alignments, the mechanics, the analysis into showing you what I'm seeing, the context behind some of the decision making. I'm never going to be perfect, right? Like, this was far from perfect. But the thing is, I have to remember these slight mistakes. I'm going to call them mistakes, because down the road, like in the next setup I take, if it's a 3-minute or 2-minute setup, I'm going to make sure to wait for that candle to close typically. And I'm only going to really chase now on that 1 minute. But I still maintained the system rules that I have of aggressively taking TP and aggressively moving my stop loss to break even, right? Because we need a good defense. And that's just the system I play here. That's what I've learned with IFVGs, just from everything I've studied, from the people I've studied. I feel like being more aggressive is a better position to be in, and instead of, say, waiting for, hey, I'm going to wait for 2R, right? Because this would have been 2R right here. And look at that. Can you imagine? And this is what I talk about too in previous live streams, but can you imagine seeing price do this? Literally miss your TP by a few points, 4 points, and you don't take anything off the table, and then the next thing that happens is stop loss. This is a big reason why I'm now in the situation of taking profits aggressively and not giving anything back to the market, because I'm tired of that happening to me. And this is why I trade this way now. So, does anyone have any questions about this? I'm just going to grab a sip of water. And if you don't have questions, that's cool. So that was NQ today for me. Get rid of all this stuff. Let's just see what price is doing right now. And we also know we have FOMC happening this week, right? So typically when that happens, the market doesn't trade the cleanest, right? Because there's a lot of uncertainty. No one knows what's going to happen. So all we can do, once again, in those situations is just be cautious, but follow our rules, however that looks, right? So if you're someone that's trading IFVGs like me, then, this is how my rules are. Now, if you're someone that's trading like a unicorn model, let's say you're doing 50-minute, 4-hour, let's do 4-hour, 50-minute, and 4-hour, 50-minute, 1 minute, right? We were just on there, but so let's just see, where would it be here? So this is the 6 to 10 candle, and then this would be the 10 to 2. So price moving up aggressively here is taking out old swing highs, right? So that basically means you're still in that short bias, right? H4BSL, H4BSL, H4BSL. So that doesn't change. If you go to the 15-minute, once again, you're looking if you're looking to align with those shorts, right? Then you need price to sweep 50-minute liquidity. So when you see this happen here, you then jump to the 1 minute, and then if you're looking for that unicorn model, and this is part of the game, okay? Sometimes it's going to work, sometimes it's not. Sometimes it's going to look like you have a valid setup, but really you don't. So right here you have a sweep. Is this a valid unicorn? Hard to really say, right? Based off of this. So like, let's just mark this off as a potential breaker block. Here's our liquidity sweep. So if we're looking for a unicorn, you're looking for an FVG to form inside of the breaker block and then displacement through. None of it happens here. You have chop and consolidation, and you finally get it here. Right? Here's your FVG right there. But this trade ends up going to stop loss if you had taken that unicorn, right? One of the things I've noticed with Matt when I studied him is if he saw stuff like this happen, he would deem this to not be clean. He would deem this to not be a very clear A+ setup for unicorns. So if we're looking at how many candlesticks it took to confirm this thing, that's 16 candles. So that's a lot of candlesticks, even on the 1 minute time frame. Like, that's a lot of candlesticks to form to confirm a unicorn. Ideally with unicorns, you want to have them set around 8 candles to maybe 10 candles, something like that. And what that ends up looking like is you get your move like this. Sorry, let me change this to gray. Yeah, exactly, Rob. It's not a clean breaker, right? But when you're in real time, it's quite difficult to suppress that logic because you've been waiting for so long to take that trade, right? And it's a normal thing to happen. But like, ideally, we want candles to just rip through like this, a few candlesticks at most, right? To rip through what would be deemed as our breaker block, right? So like, this would be our breaker block, right? Instead, what we get is this kind of a chop, and that's not what we want. So let me just show it to you like this. Right? So instead, what we got was something like this. And let me just turn this into a line chart. Actually, that doesn't work because it's not showing me the highs and the lows, so I'll just keep it like this. Okay, so something like this, right? So instead of getting a smooth displacement through the breaker, right, like a knife cutting butter, you get this chop and then a collapse, but that ends up being our fake out. So just wanted to show that. That's the H4 level thing there. And then as price starts to move further and further into the session, like deeper into the session, typically you would start getting less interested, right? And then you can really see here, like, there's really nothing clear here at all, right? So that's basically using a 4-hour, 15-minute, 1 minute time frame. Does everybody use the 1 minute, or anyone using 5 minute out of curiosity still? So if you are, then I'll just quickly run through what the 5 minute might have looked like. Actually, let me just backtrack again. So if we're looking at the 5 minute, I mean, these levels are still pretty legit levels, but there's really nothing here, right? I think the only thing that kind of sticks out is down here, right? Where you have a clear unicorn that forms to go long. The problem is it aligned with an hourly? time frame. Yep, Don, I totally agree, man. 5 minute is really, really hard. It's mentally grueling. So here's 9 o'clock, and I mean, 4 a.m. I mean, does that level even sweep anything of value here? Nope. It's not an FVG. It's an FVG here, but I mean, there's not even liquidity here. So it's, I mean, there's nothing really even aligning on the hourly to take along here. From here at the, I mean, of anything, I think the only thing that kind of sticks out is maybe there's an EQ play here. So like if we open up London and we show the pivot midpoint, let's see if it shows it. So there's the pivot midpoint right there. I'll just draw out the line so you guys can see it. That's the EQ of the London kill zone, and that's exactly what gets flipped. So I mean, if you're going to reference some sort of a level, I mean, that's the only level I can see. Whether you want to use that or not is a pretty risky thing, right? But you know, here's your breaker block, and once again, you know, this is actually, even though it's not technically a valid setup, I think most people might not have taken it. The key thing to look at here is, you see how we have that, like that clean price movement where price just like slices through the breaker block with a few candlesticks. I showed you that other setup where it took 16 candles. If I show you this one takes 10, and it's on a 5-minute time frame. So that's showing you, like I said, we wanted like 8 to 10 candles, right? Like that's perfect. Rob says, I used the M1 time frame, and that was my setup today. Right on. So it was, you know, you took a position basically right where I took that position. Did you end up taking any sort of TP, or did you end up break even? Oh, it was a loss. Sorry, just saw that. Yeah, I mean, I think this kind of references what I was saying earlier, right? Like and I'm not trying to rub it in. That's not what I'm trying to do here. I'm just trying to showcase or feature like an example of something that used to happen to me a lot. And I don't want that happening to me anymore, because I'm different than everyone else, and you're different than everyone else. But you know, we all do experience FOMO and emotions in similar ways, but different, of course. I think over time I just couldn't handle seeing that happen like over and over and over again. It was just like too much. So, but here's that breaker block off the London kill zone EQ. Let's just hit play. I think oh yeah, look at that. Wow. So I mean, you know, I said this actually on my Instagram, like to keep an eye on EQs always. EQs of ranges are so important. And I mean, here's now another example where you have a beautiful EQ. Oops, let's use, where's the circle? Oh, I don't even have the circle. Okay, let's just use this. Beautiful tag of the EQ there to set up the trade, and then you have a beautiful move just tagging the lip of the breaker block. Now, granted, no higher time frame POIs are available. If you're lining things up that way, you would have just watched this thing fly to the moon. So it is what it is. The risks we take as traders is one of those independent processes that you have to take to figure out what works for you and what doesn't. But that's NQ. What was the other thing to talk about? Okay, the other thing to talk about is Bitcoin. So I know some of you probably don't trade Bitcoin. That's cool. Don't worry about it. It's not a big deal. But I was tracking this trade. I didn't take it, but I was tracking, and I thought, oh, you know, that's a pretty cool thing to talk about. So let me just get rid of everything here. Okay, and just show you what I was looking at. So basically, over the weekend, you know, price was pretty gross. Massive rejection candle here. Let me get my thing out. And as I'm watching price collapse, the thing I always do, just like with any other asset I'm trading, is I'm looking to the left to see where the liquidity is. So I saw there's liquidity here, H4 sell side liquidity. There's also a bullish FVG here. Let me just mark that off quickly. There we go. H4 FVG. Oh, my settings are all weird still. Let me just set that up quickly. Let's change this to green. Text. Let's change this to green as well. And Resave this H4 plus FVG. Okay, I'll lock it. So I'm watching price dip into liquidity, and it's like, okay, well, what do we do when price dips into higher time frame liquidity? Well, we go into the lower time frames. So for me, I like using the H4 level aligned with the 15-minute, and typically I'm not really trading a unicorn, but I'm observing it because they do work. And sure enough, I was like, wow, this one's actually a pretty nice unicorn. So beautiful sweep, right? Got the nice sweep. Once we see the sweep, this can then allow us to see where the actual breaker block is, right? So the thing now with this breaker block is which level are you going to use as your breaker block? Are you going to use this candlestick, the 530 candlestick, or are you going to use the series of candlesticks to the left here that start from 345 to 415? What would you use? Yeah, Don, I personally don't really like trading crypto anymore, but it's kind of like I still reference it. I still study it. I still like to see how it moves with a lot of the concepts that I've learned through Matt and through some other people, like in regards to ICT. Because I think I've heard a lot of people say ICT doesn't work with crypto, but I would disagree. So if we're looking at this, this single candlestick creates the low and the high. Okay, so that's number one. There is the FVG right in here, this area here. The way I like to personally trade crypto is I actually would have just used the series. Now I know Don says he would have used the single candle. That's cool. The reason I just would have used this is because it's just giving me more room to breathe. And when crypto moves with so much volatility, it tends to manipulate things out of context. Like it doesn't hold structure properly. Like say if we trade like NQ. So that's why I kind of use a larger, a more forgiving breaker block, right? Like I might bend the rule a bit just to let's just say there was another bearish candle in between here. I would have just used it anyways. So things like that, I'll bend the rules a bit. I feel like that's kind of work for me. But clear sweep, breaker block, no matter where you place it, there's a breaker block either here or here. I would have used this one. You have the FVG. It's super tiny. It is there right here. Right? Super tiny. But it's right there. Right? There's your FVG inside of the breaker block. And then right here you get the candle closure confirming the move. And entry would have been right at the lip, right? So you would have been tagged in right there. Now I would have just used a stop loss at the low. Right? Then you can set out your standard deviations, anchoring the low to the high of the setup itself. Let me make this a little darker. Thought I had it set that way. Let me just resave it. Oops. Okay. And then what you could do is just start looking to target, either 2R or whatever that looks like for you, right? So this is 2R right here, right about here is 2R, right? Something like that. Now, if you were going to use the lower breaker block, okay, watch what happens now. And this is part of the game of risk that you have to play, right? Because I set 2R here, I would have probably manually taken TP here, right? I don't like leaving profit on the table. Probably take multiple TPs because it's crypto. But if you are going to use that singular candle, watch what happens now. What you've done is you've given yourself a better position, right? Stop loss is still in the same place, but it's smaller now, which then means you can move this down here. So swing point to the top of the breaker. Here is actually where 2R now sits. Right here. And actually 2R gets hit perfectly. So here's a beautiful setup that occurs. Super clean, right? Exactly like what we want to see with, when we look at NQ or whatever. But you can see it playing out on Bitcoin. Now, here's another thing. Now, this is kind of like the setup that I usually take. Is I usually wait for that reversal to form, and I wait for a move like this to occur. Let me just show you. I know I've talked about this in the past, but I'll just quickly go over it again. But usually what happens is I like to see price go into the drawn liquidity and do whatever it's going to do to create the reversal. So if there's a liquidity sweep, there's a liquidity sweep. If it's a spike, it's a spike. But the thing I'm really looking for is for price to go up somewhere. It doesn't have to, break or create like a change state delivery or have a market structure break or break a structure, whatever you want to call it, change a character, whatever terminology you want to use. I just want to see price move up and create a higher low. And the second I see the higher low form, right, what I then can do is start to measure, I can measure the move with Fibonacci. Now, let me just get rid of this for a sec. Because to me, I saw two different types of setups here. So I showed you the first setup with the unicorn. Let me show you the second setup. So the second setup is, here's that move where price creates a higher low, right? Now what I can do is, let me just use this. Okay, so what I'll then do is look to see on that leg right here, that higher low, does it measure back into the golden pocket? And sure enough, it measures into the golden pocket. So that's the first step. Okay, perfect. The next thing I'm then going to do is now I'm going to look to see for price to break that structure. Okay, I can use things like a trend-based fib to set this up. So I'm just anchoring the low to the higher high to the higher low, and what that does is it gives me fib extensions. So I'm looking for that one fib. I have 1.618 here and 2.618, and then it goes higher. But what I'm looking for is to see how price reacts off that one level. And what I can then do is take the swing low or the higher low that formed. And I know this might get a little complicated, so I apologize. But I'm just going to anchor that low to the high that's made here. Okay? And the reason I'm doing that is because, once again, it's the power of the EQ, power of the 50% level. So if I show you the 50% level right here, price pings it. So this technically is usually where I enter, right? So price would go higher, and then I would look to enter right here on that 50% retracement. Okay, that's typically where my trade entry would be. And then my stop loss would just go where the higher low was, and then I'd be targeting that 2.618 level, right? So let's just do this. Okay, so it'd be something like this. So the first setup here already hit TP, but I saw a second setup, which is that continuation play, right? So if you think of even T-trades, this is more aligned on the C3 expansion type idea. But I'm not really using the T-trades concepts. I'm using more Fibonacci and more like market structure. So there's your 0.5, and then you're just targeting the top. Now, if you want to take profit here, put your stop loss to break even. Yeah, but we all started with crypto, man. This might have been a stop out, right? I don't know what happens after this. I can't remember. Actually, we're already live. I thought I had to hit play. But you can see the price actually just rebounded from here, right? So this would have been like another type of setup. And it is something I use typically because I find with crypto, especially with Bitcoin, like it doesn't always give the most respect to, let's say a unicorn, even though it works. In my opinion, it has worked a lot until you get into like a losing streak, and then it just keeps losing. I've had that happen. So I feel like if I just were to wait for that reversal confirmation and then start entering on continuation, then I can kind of catch that move and hope for, that expansion. This move ends up getting tagged Sunday night, right? Almost 11 p.m. So that's the thing with 50 minutes is like, there's no real kill zone that you're really watching, right? P Gambler says, I still trade perps, though along with futures prop firms. One thing I noticed about day trading crypto is like, for example, NASDAQ will give confirmation and rip, but crypto will pull back most times, and you can check the reaction to catch the second leg up. Yeah, they definitely have like sometimes like a delayed response, right? Is that probably what you mean? But even this move here, like I found when I was watching NQ today, so this would have been, what time is this? 10:15. Let's just go to 10:15 on crypto, on the NASDAQ. So 10:15. Oops, let me just go back like this. Go to 15-minute. So Here, you remember that candle where, so we got news, interesting enough. So I think 1015 is right here. So you see this massive sell pressure candlestick? On crypto, that's this, right? So way more volatile, way more aggressive. If I go to the financial juice, okay, so the news that I was referring to was at 11. Okay, so that's not the same thing, but where is 11? 11 is right here. So no news hit. When I was on the lower time frame, there was a huge spike candle. I think it was this one right here where it just spiked down. And that would have been at what time? 11:15. What did Bitcoin look like at 11:15? Yeah, same thing. So it had already dumped. And the reason being was this news here. Microsoft unveils latest AI chip to reduce reliance on NVIDIA, which I think would be bearish for the market, but because NVIDIA holds so much weight with the NASDAQ, but it actually looked like it did the opposite, which was hilarious. It just kept going higher. So, but anyways, this is the point of the story. I just wanted to show you these kind of two lower time frame ideas. The unicorn, obviously something you guys are all familiar with, but the second one, which is more of the market structure, Fibonacci, using like actual swing points, like the higher low and the higher high, and then kind of understanding like how you can catch those pullbacks, because typically when you get that pullback or retracement, I should say, into the 0.5, it's typically aligned with market structure, right? Like something like this, where you have like a clear, say, support resistance, or and this is kind of going away from ICT and going more into like a retail kind of concept. But like, if you have like support and resistance, right? Support gets flipped into resistance, and then it flips back into support, right? So this is clearly a key area. And then you align that with, Fibonacci, golden pocket. That's a pretty good confluence to have when you're tying things together. So these are kinds of things I look at with Bitcoin. I have to trade it a little bit more. I don't want to say the word advanced, but I'll just use the word technical. Like I have to be a little more technical in my approach, just because if I were to just blindly follow an ICT concept, I'm going to get blown out of the water. And the only reason I say is because I have been blown out of the water. So it's really humbled me in that way of not just taking it for granted because of how good we have it with NQ. And that's a big reason why I kind of stopped trading crypto with futures as much as I used to, because it's really hard to trade something that doesn't respect the setup itself, right? Or the parameters that you've set for, the system that you're trading. Because you see everything line up and then it just manipulates you and then goes the opposite direction where you want it to go. So it's pretty crazy that way. Don says, yeah, the trading hours is killer in crypto. There's no opening times, so you don't know when to expect volatility. The only thing I'll speak to that is and say, I do believe it respects similar kill zones that we use with, say, traditional markets, right? So let's say, London session opens at 2 a.m, right? You will typically see some movement around that time. But I find Asia has more movement with crypto than London does. And it's quite fitting because, I don't know, just the Asian market loves crypto. I don't know what it is, but the New York market obviously has a lot of volatility too because all the volume comes in. But I find that the Asia session has a lot of movement with crypto. When I used to trade it ages ago, I mean, the big crazy moves were happening during Asia, and it's funny, they would do it late at night when everyone on the eastern side is like sleeping. So like when we all would wake up in the morning, Asia has like literally dumped on us, and you're like, oh great, Asia dumped on us this morning, right? So it's things like that. Anyone else have any questions? P. Glammer says, I set alerts on a volume-based indicator and also Bollinger Bands. Yeah, Bollinger Bands is classic, man. It sets that range. So very, very classic stuff there. It helps you know when there's a lot of volume entering the market and it's prime conditions for expansion, for sure. And, that's a whole trading system and model in and of itself, right? It has nothing to do with ICT. So, there is a world outside of ICT. I think sometimes we forget. And we think that these older concepts, we'll even say retail concepts, don't work. But you're right, exactly, P. Gambler. It helps with crypto because a lot of retail people are trading crypto. Whereas when we're trading things like NASDAQ, there's like cold-blooded killers trading in NASDAQ, right? So And there's a lot of big volume moving prices, so it's easier to kind of see, like if we're trading an IFVG, like I've showed you, it's easier to kind of see where the momentum is going, where the volume is. Crypto, it's the Wild Wild West still, sadly. So it is what it is. Okay, the only other thing to talk about is EU. So the only reason I'm bringing up EU is because I do have a CFD prop firm account, and I do I have been trading off the hourly time frame, which I've shown in the past. But what I wanted to show you was actually using the IFVG model I use with the NASDAQ, or with NQ, I should say. I've tried to start seeing if it works with EU on the 1 minute. And truth be told, it's actually quite amazing. Today, I'm only showing this because I'm going to keep monitoring it, so I'll keep talking about it. But I just want to show you what I saw. Now, let's just say 12 p.m., 11. Actually, I'd probably say 11:30 is my cutoff, just because of the volume. But what I wanted to show you, let me get rid of this TTFM indicator for a sec, is you'll notice that there's a few setups here. So same concepts, right? Looking for higher time frame liquidity to sweep. Then I'm looking for a good reaction with a nice sized IFVG, right? Now I'm just going to go to my settings, just double check some stuff. So custom 1 hour, that's the same. All this is the same. I think the one big difference is right here, the threshold. So in the threshold with NQ, I use custom with 5 points, right, for that size. But with the IFVG threshold for EU, I have it set to all, but I probably should keep it set to small. See if it takes out anything. Okay, so it doesn't take out anything. I wonder if I hit medium, what would it do then? I'm just kind of curious. Let's use medium and large. And the only thing that this is doing is it's just showing us setups that are within a certain amount of ticks, right? So it's looking for a certain tick size. So that one's actually still. I'm gonna just go one more higher. I want to see if it still deems all these setups valid. Okay, now it took them all out. Okay, so let's just go back to all. So first off, here's 9:30 open, okay? So if you're looking at this setup right here, this is a failed setup, but this is basically what can happen. Like, this is what I'm looking for, right? Like a clear V shape. Sometimes you're going to win, sometimes you're going to lose. This one was a loss. Okay, great. Here's another setup that forms. So the first move that happens here doesn't really show us anything, but then price sweeps that same level and creates another setup. And then that setup, to me, worked out. And I was watching this one. I think I'd shared it inside of the premium side. I was talking to some people there. But, that same concept where my stop loss is going to probably go above the top there, and then I'm looking to target like the lows. And what I'll be doing is skimming profit as price moves, X amount of points. Now, I can't use this and say I'm looking for 20 points, right? How do you relate time to price in your personal trading? Do you just focus on kill zone sessions and higher time frame candle ranges? Okay, so I'll just digress to that question for a sec. When I'm trading NASDAQ, or sorry, let me just say NQ. I don't know why I keep saying NASDAQ, even though it's the same thing. But when I trade NQ, it's kill zones. I'm just looking at the New York kill zone. So my ideal time to take that trade is like 9:30 to like 11:30. Sometimes I'll trade a little earlier. It just depends on what I see. But that is the kill zone. Anything after that, I don't trade. And typically anything before that, I won't trade. Of course, you got to look at news, right? If news is going to drop, you don't want to be in positions when news drops. So you have to be mindful of that and just wait. If Trump is speaking, you don't want to be trading when Trump is speaking, things like that, right? When I trade BTC, when I'm looking at it on the 50-minute. So because it's like a swing type position, I'm not referring to kill zones. I'm just looking at higher time frame liquidity ranges. If they get tagged, alert gets set. It pings. I look at the lower time frame and then I observe how that 50-minute works. Now, if a trade starts setting up when I'm about to go to sleep, of course I'm not going to take it because I don't want to take a position while I go to sleep. Even though it's a swing position, especially with crypto, I just won't do it. If I was trading the hourly on Euro, I would take it because I know that there's less manipulation than crypto in like doing something heinous, right? And like completely wiping me out, and then going the other way. So with euro, I have taken those kinds of positions, but that's using like a daily, hourly time frame alignment. And once again, that's not using kill zones. That's just using the higher time frame daily candle ranges, and then I'll zoom into the hourly. And I've shown how to do that in previous live streams. Just circle back to those; you can find them. But once again, something like this type of a setup, it still worked. This runs about 1.66 full. TP1 would have been here. TP2 probably would have been inside of this FVG here. And, I might have even taken a TP3 at the bottom here. But definitely 1 and 2 here. The rest would have probably been taken out break even, whatever contracts were left over. But once again, just showing you that idea that it still works. And then price continues grinding higher. Here's your next BSL H1 level. Now, this one's really interesting because something like this is really nice because you get a nice strong move up and then an aggressive reaction on the opposite side. And, once again, it's the same concept. Now, would I have had my stop loss on a position like this up here? Probably not. Would I have had it about here? I could see that. This is about 0.78. This is about 1.5. What happens next? So if I had taken 2 TPs, stop loss goes to break even, I would have just let this trade completely fly because it's a CFD prop firm. There's no restrictions on holding positions overnight. I would have just kept waiting until, we see another very clear, valid swing point, which would have been way down here, right? Like this area here, for example, right? So this would be another clear point. So what does that take us to? It takes us about 2.85 RR. I would have, taken the full position size here around here. So just showing you, these things do work. I find ICT Concepts works very, very well with very high liquidity type assets versus like the low liquidity type assets, like say Bitcoin. And then if you're going to trade altcoins, like that's a whole other topic of conversation. Do I have my own channel? Do I have my own channel? That's a good question. It brings me to my next topic of conversation, which is, some people I've talked to have said they can't find my channel. Now, because my channel inside of AshCap public Discord got created after the fact, what happens is it doesn't automatically add onto your chart. So the way you can get that section added is you just go to channel and roles at the very top, and you can hit browse channels. And then right here, you can basically check off everything that you want to see and things you don't want to see, right? So here's my channel right here. I'm under analysts. I'm with Mika. And then if you just hit open, it'll take you into this section here. And I have one thread created specifically for live streams. So anything like that we're doing, like this, for example, this session, these 2 sessions I do per week, I'm going to share them exclusively only inside of this Discord with the YouTube link. It's unlisted. I'm completely cool with just, helping to keep the community intact and, helping those that are inside this community, because there's so many people and there's so many people with different agendas. I'm not really interested in all that kind of stuff and the drama that I see. I'm not really interested in all that stuff. I'm more interested in just staying in my own lane. And if, people such as yourselves want to, obviously listen to what I have to say or just hang out, whatever, that's cool with me. Like that's what I'm looking for. I'm looking for more of that. I'm not really looking for, having thousands of followers and I'm not trying to do any of that stuff, as you can probably tell. Even though I might have an Instagram channel, it's not really for that. It's just I like to express my thoughts. When I was inside the premium side, which is Unicorn University, we all kind of were encouraged to kind of create our own little personal threads. So when I first started, that's what I did. And there was 0 followers, which is fine because I was doing it for myself, but I was posting a lot of the things that I thought about. It's just like a nice place where I could post a bunch of shit and come back to it. But since then, a lot of people started following and we then had to lock it. So what that's done now, and you're probably, if you're asking, like, do I have my own channel? It's forcing me in a good way to just kind of continue to chat in the more general areas, like general chat, for example. I like to share ideas there, share news, share, various things, levels. There's also, the crypto sections here. Like I'm posting in here. There's a Forex section. I'm posting in there. So I'm trying to be more a part of the community in that way. Because like I said, I'm not really trying to, I'm not going to sell anybody a course. And I'm not looking to, have people join like private mentorships and things like that for me. I'm more interested in being part of the community and helping those that want to hang and that might want to learn, or just like I said, just want to talk shop. I'm passionate about this. I'm sure there's a lot of you that are passionate, and my goal is to just connect with you people, right? And have a good time, and hope that we can all aim to be profitable and reach those goals of success that we are, either maybe you were already at that level, maybe you have a higher level, whatever that level is. My goal is to just work with everybody and have everybody work with me too, because I'm also learning with a lot of things. I'm not perfect, but I want to obviously reach specific goals that I have. So that's basically it. May I ask why you chose Kira for the name? Oh my God, you don't know, do you? This guy. Do you know who this guy is? That's why. Kieran. No, not Kieran, bro. Oh, okay, Kieran. I know some Kierans, but yeah, Kira, bro. Death Note. I just had, like I said, man, I started things for fun, and I'm just having a good time, right? No, it's Death Note, man. Death Note. So even my location is a book, a Death Note. I think even on in here, yeah, even on my section, I told White Chocolate to change my icon or emoji or whatever to the Death Note book, just to keep my brand, on point. What other animes have I watched? Oh man, there's too many, dude. Geez, off the top of my head, Attack on Titan was really nice. Monster was pretty cool. There was actually one from back in the day. I mean, I guess it is more anime than manga, but it was called Afro Samurai. I'm not sure if anyone's seen that, but that was absolutely amazing. Afro Samurai had the RZA. I think it was the RZA that did the soundtrack. Sam Jackson did the voice of I'll just say one of the characters. I don't want to spoil anything. But yeah, man, Afro Samurai is definitely one of my faves. I think there's a new one on Netflix called Blue Eye Samurai that I saw. That was pretty sick. And then in terms of like old school stuff, like, Ghost in the Shell. I mean, there's stuff I haven't seen that I have to see. I can't remember the names, but I've had some people recommend some stuff to me. So if you know of any cool ones that you think I should watch, just DM me and let me know, man, because I'd love to know. I'd like to grow my list and keep watching. There's like a volleyball one. I forgot what it's called. Blue something. Okay, you got one here. Steins Gate. Never seen that. Never heard that. Got to check that out. We'll add it to the list. Blue Lock. Yeah, man. Blue Lock. I need to get on that. I heard that's like amazing. And the funny thing too is like my daughter's really into anime and manga too. So that kind of is why I started to kind of go back into that world, because I noticed she was really interested in it, and I was like, oh, let me see what this whole world is about now, because I remember what it was like before. And then because to me it was always just like Ghost in the Shell. It was like a lot of the drawings and the anime was in a very specific kind of Japanese, like very Japanese kind of way. Yeah, Hunter x Hunter, that's something I think my daughter's been interested in. There's some other ones too. I can't remember the names. I apologize. Full Metal. Yeah, Full Metal. Alchemist. That's I heard that one's a really good one. I actually haven't seen that. But yeah, there's, the list goes on, man. It's huge. It's a whole world in and of itself. But yeah, for me, when I saw Death Note, I was just so blown away. I thought it was like one of the greatest things I've ever seen, and the concept behind it. And I just loved the ending. I just loved how crazy Kira became. And I just, when I saw like some of the imagery, I was just like, oh man, this is so cool. So I was like, oh, you know what? I need to get on Twitter and change my handle to something more related to, my futures trading. And I was like, I'm going to be known as Kira. So there it is. Anyone else have any questions or anything you want to talk about? Yeah, Monster is a rare gem. Yeah, that's crazy, man. Monster is wild. Yeah, exactly. That's so cool. The only reason I found Monster is because I was looking at, after I saw Death Note, I was like looking up, it's just like asking Google, like, what are some comics, or sorry, what are some manga or anime that are similar to Death Note? And then Monster came up, and I was like, okay, let's check out Monster. That's crazy. Old though. Other than that, I think that's all the technical stuff I got for us for today. Groovy Jean says, that's a cool name, by the way. How do you know Ash? Yeah, how do I know Ash? Well, I owe Ash a lot, first off. I'm sure a lot of people have studied and learned from him, but I heard, I'll give a very brief story here, but back in 2023, I was trading off of a CFD prop firm, but I was trading the NASDAQ, so like NAS 100. And I was trading like kind of something similar to the 2022 mentorship model. And then someone had pointed me in the direction of Ash and said, hey, have you heard of this guy Ash trades? He trades a unicorn, and he's saying, this person was telling me stuff about like jagged edges. And I was like, I don't know what the fuck a jagged edge is. Like, what the hell is that? Sure enough, I started learning it's like ICT concepts. And I didn't know much about all that stuff. But I started to study his work, and he had put out a PDF with Tyler. Rest in peace to Tyler. They had put out this PDF together. So that PDF literally changed the course of everything for me, because I studied that thing inside out, and I was just completely blown away by it when I started backtesting. And backtesting, or I should say reviewing the trades I had taken. Like, there was a lot of trades I took where the unicorn was literally there. And I was like, holy crap, okay, this is actually quite impressive. Where's the PDF located? I think I would have to ask Matt if it's located somewhere. I have a copy of it. If you want a copy of it, just DM me. I'll hook you up. That's what put me on to Ash, and then I started watching his YouTubes. His YouTube back then was every Wednesday, and then he would do 2 private sessions in the premium side before it was called Unicorn University. So that's how I got to know Ash, just watching him religiously. And then it got to a point where I was like talking to another member he had, I got to know this guy pretty good, and then I joined the premium side, and that's how I really got to know Matt. And then I just kind of rolled with it and just went all in, and showed up to every single live stream he did, studied every little thing he was talking about. The one big takeaway I will say, it wasn't the technical, even though I learned a lot of technical stuff from him. The main takeaway I took away was a lot of psychological stuff, believe it or not, because that man's discipline is on a whole other level. His mindset is on a whole different level than anyone I've ever seen. So when I first heard him, I swear to God, I thought he was like a 40-year-old guy, because I'm a guy who's in my 40s. So I was like, oh, okay, like I'm not going to follow like someone who's a teenager, right? Like I can't do that unless like, I have tried, but it's just like there's a immaturity factor there that just obviously is like a disconnect. But with Matt, I was like, oh, this guy's like super professional, straight to business. He doesn't beat around the bush. He's straight to the point, right? And then I thought he was like 30, 40 years old. And then like I find out when I'm in like these private live streams with him, like the dude's like 26, 27 years old. And I was like, oh my God, this guy's not even 30. I'm like, this is crazy. So he's obviously 30 now, because it's been some years, right? So he's getting older, but he had all of that going on for himself in his late 20s. Unbelievable. But he's been trading for, I think he said he had been trading for 7 years at that point. So he's probably like at 9 or 10 now. So he had been trading for so long to get to that point. A lot of people like us, maybe us, I say us, but I'll speak for myself. Like, it's only been like a couple years, like fully ICT, showing up every day, practicing, right? He had done that for 7 years. So when we look at his success and the things he's achieved, we have to remember, like, he's already gone through the heartbreak. He's already gone through the depression. He's already gone through like the bankrupt, bank accounts and being in debt probably and stuff like that. Like, he's already gone through all that stuff, and he's he's worked around that and come out on top. I think all that's achievable for anybody. You just have to put the time and the effort in and find what works for you. And that's a big reason why I like to live stream and help. They offered it to me as an option, like if I was interested, and I thought, you know what, I'll do it. Why not? I love this stuff. So that's why I'm doing what I'm doing. But that's how I got to know Ash, and that's how I got to know White Chocolate. And the rest is history. Here we are now. So I love the community that has been built, and a lot of amazing like-minded professionals in the premium side, as well as, I've been trying to focus more on the public side, because I noticed, like if you're going to have a really good premium side, like it has to start with the public side, right? So that's why I'm way more engaged now with the public side. I'm doing these live streams here. Before I used to just do the live streams on the premium side. So that's why I'm now doing it on the public side, just to share the content, share the value, and and I'll tell you something. So obviously with Matt's doing 2 premium live streams a day for everyone in Unicorn University. He's there 24/7 answering people's questions. Like, he's really dedicated there. The way I'm kind of using premium is like, I do have my own channel. I'll just show you quickly. So like, I have my own channel here. So I have my own channel here. So I got, there's a questions area. There's all the trades that I take. So like the trades I've shown you today, like I'll map out the trades I took and what happened. But the big thing for me, like I also have crypto in here and stuff that I talk about. I used to do exclusive videos with Session Rewind here, but now because I'm doing the public side, it's kind of like it's for both. But I do have tons of resources in here that I don't have on the public side, so that it is all on the premium side for these guys. I do show stocks, because I do look at unicorn model setups with stocks. Like here's an example of one, and I use the higher time frame. So these are massive swing positions. So I do share a lot of setups along, with those assets. And then I used to do like a book study mastermind. Now you can see it says 30 days old, but we were going over best loser wins. And, I had all the detailed notes that I had made. We had live streams just specifically for it. So I was just trying to, share more value. And then, had a homework page where people could learn how to do different things. So I was trying to provide some value in that context. Even just testing out other models that you may have heard of, right? Like a forever model, for example. But the main thing that I'm now doing on the premium side is I'm just way more engaged now with the trading floor. So all of my thoughts throughout the day of the session itself I'm literally just, I trade with this guy named Iman. He's a cool dude. I've known him for a while. But this is where, if you want to like trade with me, that's where I'm at every day. So every day I'm trading, sharing, details like post by post as I see things, right? Like even that EU setup, right? I was sharing the EU setup even before inside the wrong channel, but I was sharing the EU setup because that's where I'm doing my business, right? So if you want to engage on the premium side with me, this is where you'll find me. And that's pretty much about it. We help each other here, and it's not to say we don't help each other on the public side. It's just, there has to be a difference between, what's free and then if someone is paying something, right? Like if someone is paying something, then there should be some additional type of value, right? That's just business, right? What asset class do you generally trade on the day-to-day? It's just NQ, man. I've gone all over the map. I've tried NQ, ES, GC, CL, 6E, which is the Euro, all at the same time. That is a recipe for disaster. Do not do that. I got burnt out super fast. Paid for it. Wasn't good. Now what I've learned in my time is less is more, that's why I literally just look at NQ. I can make a very good living just trading NQ, trading one model, one system. I do reference ES. So what that means is I have a split screen like this. And what that means is I'm literally just watching ES very, very closely with NQ at times too. I have another window that I'll have open so that, like, you know, if I start seeing discrepancies between the two, right? Like ES is tagging previous daily high, but NQ hasn't, right? So it's things like that. No, I don't look at YM. I used to. The only time YM shows up now is when the TTFM indicator maps out some SMT. That's the only time I'll see it. I used to reference it a lot, but now, like I said, man, less is more. I just don't think things need to be so complicated anymore. I really think, like, the less time we have actively in the market, the better off we're going to be, and the more money you'll potentially put in your pocket, right? Because the more exposure we have, obviously, into the market, the more risk we take on, and that's not ideal, right? So this is why we have things like the 28 plus trades challenge right now, right? Where, you know, let me just go to mine for a second. So, like, you know, in the morning I showed up, and where is it? I can't even find my thing. Where is it? Oh, here it is. Missed it. It's so small. So, like, you know, every morning showing up. But the reason we started the 28 plus trades challenge is just to get people accountable, myself included. Just want to make sure we're on the right track. And, you know, I'll map out, like, my max trades allowed today was 2. Today I took 2 trades. One was a win. One was a loss. The other one was a win that got me to break even. And that's it. I stopped. And I'll make my notes about things, right? So less is more. Less is more. 100%. That's what I've learned. So I have shared my 2 setups that I took today inside here. Here's that second setup, which we've already talked about. And then here's the first setup. So I'm now at trade 3 of 20. And I did have to have a restart. I'm not going to lie. I FOMO'd and screwed up, and I went from my second trade back to my first trade. So it happens. I have no shame about it. But now the plan, you know, is to, obviously, like the plan was before, is just to maintain consistency, maintain discipline, and just try to be the best I can be when I show up. And that's why having those smaller kind of windows to trade helps, because it takes a lot of, you know, like if you're exposed to the market for hours, like you're going to be so stressed out by the time it's over, right? Like you're not going to be able to do anything with the rest of your day. You're just going to be reeling from what happened. But if you only have like an hour or 2 window, that's going to make your life way better in the long run, right? And remember, we got to play the long game, not the short game. Think long game. If you start thinking short game, you're just going to end up like I happened to me. You're going to get burnt out. You're going to blow up accounts unnecessarily. You're going to lose funded accounts. Take your time. Like Robert Kiyosaki has that thing saying, he has a saying, focus. And focus stands for follow one course until successful. I take that to heart too. So, yeah. So if anyone has any other questions, drop it. Otherwise, I think we're going to end this thing. I really hope you guys all had a great day and a great weekend. If you're stuck with the snow like me, hope everything's safe on your side. Everything, you know, you got a roof over your head that's holding up. You got your lights on, heat on. You got food. Yeah, other than that, thank you all for being here. Thanks, Groovy Gene. Thanks, Don. Thanks, P. Gambler. Appreciate the questions. God bless you guys. Peace out. Thanks, Rob. Appreciate that. Take care, guys. Peace.